Okay, good evening, guys. Here's another day, another session. Today is 3rd of October, and I'll explain my today's analysis and today's trades that I've taken. I've secured around 15 to 15 pips, $15 in the profit. Let me show you what my thought process was in the morning. So when I came into the chart, I saw price at the resistance. If you see, I always do my analysis from daily time frame to 4 hour to 1 hour and to 30 minutes. So when I came onto the chart, I saw price closing like this. This is a big doji candle, means uh, there was no winner from seller side or buyer side. So my analysis was, maybe if we can continue pushing down to basically fill the wick. So whenever we see price has a wick form, whenever we see uh, this kind of wicks or this kind of wicks, those wicks usually get filled. So these wicks are basically like a breadcrumbs for the next day or the next hour or the next candle to go. So I went on the 4 hour chart, 4 hour time frame, and I say that okay, price has now created a resistance. And when price has created a resistance, if price want to move to the downside, it will always move from a resistance. This is a basic theory of support and resistance. Then I went on to the 1 hour time frame. I see price has already you know creating a lower highs and lower low. So whenever you are looking for sales, price has to create lower highs and lower lows. So let me turn on the history. So I came in the market, I saw the resistance has formed. Then I went on a 30-minute time frame. This is what that multiple time frame analysis looks like. So this is your support resistance form, and this is your support form. So whenever candle close, whenever you see a bullish candle close besides a bearish candle close, it means a support form. And whenever you see a bearish candle close opposite a bullish candle close, it means you form a resistance. So price created basically, as you can see in my previous video, price created a support, and all you have to wait is price to broke below this support. This was your support, price to broke below the support, and then you can enter a sell to continue pushing to the downside. Here's one more interesting thing, that why this sale was taken, and I'll explain you why it was taken and how what was my thought process. So whenever price uh, broke below this, as you can see, price broke below this support. Okay, we have a clean candle to the left hand side. It means price has a clean range to move to the downside. So price, what this candle did was it broke below the support. The next candle it wicked up, and right there was my entry. But what happened was price went 4 to 5 pips in my profit, and it started retracing, and it came back at this position. At this position, what I decided that okay, prices, this is not my session. First of all, this was not my session. This was Asian session. So price came to the entry point, or and it just went opposite, but in my opposite direction. I started to close partial, then I close the entire trade, which was basically this loss that I had taken in the morning. So later on, I waited for next 30 minutes to close and form a better setup. Uh, Later on, what happened was this candle has created a support. This candle created a support. Next candle created a resistance. As I already told you, whenever you see a bearish candle close beside bullish candle close, then it means a resistance form. So what next candle did was it just, this was a big volume candle, it broke below this support area. This was a support area, and as soon as this candle created a top wick, and it started breaking the its own low. I executed a sell. I executed multiple positions because I knew that price has a clean range to the left hand side. If you see the left hand side, price had a clean all this range to the left hand side. This is a clean range, what we call in the trading. So I wanted price to write down till here. But if you go on a 15-minute time frame, 15 minute we had a support at this area. Look at this. This was a support area on the 15-minute time frame. So what I thought that, okay, here is a support. I am not in my session. Let's secure the entire position. So I secured the entire position. As you can see, this is where I secured my position. And as soon as I secured my position, price retraced and it went in the opposite direction. I secured most of my major position, sorry. This was the positions that I have secured in the morning, and I should have called it a day. This was the end of, this should have been the end of the day, and I should have not traded after this. But later on, what I did was I went into the London session, and in London session I took some 4 minute entries. Again the same idea was there, that price created a support, price broke the support, and this candle should have, you know, did the same thing, should have done the same thing what it did over here, but sorry, over here, but it didn't do that. It didn't, it just didn't went into my direction, and I just call it a day. I just took a loss. Then later on I just waited, because whenever you take a loss, you have to, you know, take a step back and see market from a broader perspective. Then price created a resistance, and I didn't enter any you know, positions on gold. But what I did was I went on a pound yen, because these are the only two pairs. If you can see over here, these are the only two pairs that I see on regular basis. It is very important that you should look after only one or two pairs, because that's all you need. And if you, I'll explain you the trade that I've taken on pound yen, and I secured good positions. Here, let me open up the chart history. Here is the trade. So what pound yen was doing, it just broke. It had just crazy amount of volume in pound yen. If you can see the size of this candle, it was more than 100 pips. And whenever you see this kind of candles, I usually wait for price to, you know, come down, create a support, come up, create a resistance, which means a this whenever this happens, it means a low form. And there's, whenever this happens, there's 80% chance that this low will get tested, but it never come back, it never retraced. Usually what happens when this kind of scenarios, price created a support in this area, price created a support, next candle started breaking the wick of the previous bullish candle, which was a small candle. Whenever you see candles with a smaller body, it generally means that there is a lack of volume for price to push up, and same vice versa for the bearish side. So right now when you see these two candles, they had a lower body. Lower body means the wicks are bigger than the body. These are the big candles, or you can see smaller body candles. The next candle started breaking the low of the previous candle, and whenever that happened, I went on to 15-minute time frame. And if you see 15-minute time frame, we had a support form, and as soon as this candle closed below the support, this was your support form, this candle break and close below the support, next candle wick up, and it's as soon as it started breaking the low, I entered a sell position. I kept stop loss above over here and ride this entire momentum for almost a 30 plus pips. If you can see, I secured 35 pips, and then later on I kept the rest position running, which was around 10% to 20%. Eventually I did one more mistake over here, that I should have kept my whenever I see let me give you one more example. Whenever I see a candles, whenever I secure the positions, what I do, I start to trailing my stop loss. And what mistake I did was I just kept my stop loss very close to this candle, where my stop loss should have been somewhere over here, where candle, this, if you give us your price a little bit of buffer to actually come up and you know, have some the spreads, or the other candles will have buffer to, you know, maintain this position, and what they will do is they'll come up and usually they'll start pushing down. But if you just keep the stop loss way too close to this candles or any other candle, what happens is the spreads will take you out, and usually that's what happened over here. The spread took me out, but it was a minor position. I wouldn't care, because I knew it that the price might come and hit my stop loss. So I was okay with it. I secured $17 on this trade, and overall, I call it a day with a good $15 profit on this my small account. So $15, calling it a day, and I just closed the chart and went on doing the whatever stuff that I want to do. So thank you guys. Thank you for tuning in. Keep subscribe. Keep watching my videos. Stay tuned for more interesting updates and education related to forex. Thank you.